May profits be upon you. Welcome to another weekly Forex forecast. We're looking at Aussie dollar, US dollar. That's Aussie USD. First, let's take a look at the economic calendar for the week ahead. And concerning the Aussie dollar, we have the RBA monetary policy statement and a rate statement happening on Tuesday. Nothing happened, no red folders on Monday. The big day is Tuesday because right after that comes US dollar core CPI. So lets us know what the inflation situation is looking like. Now, if the number comes in soft, that means the US dollar will be weakened. If the numbers come in a little bit hot, then you're going to see the US dollar spike, and that'll bring down the Aussie dollar and the euro USD, the pound USD. Those are going to drag down the USD CAD, the USD Swiss, and the USD Japanese yen. Will probably see movement up if that number comes in a little hot. It's expected at 0.3%, and the last one was at 0.2%. So, we do see a slight ticking up of inflation in the US, but that's going to have a huge impact. That news item is going to have a huge impact on the major pairs. Okay, let's look at the Aussie dollars, break it down from the monthly. All right, we're doing top down analysis here. That's what we're doing here. All right, look, the story has been bearish, right? To this point, we had a retracement. It failed to make a new high. That's a swing failure. What does that really mean? That means this low failed to do its job, which is to make a new high. All right, it made a lower high, so it becomes a target in theory for liquidity. All right, as price makes its way down, we see that price is still in bearish mode, but from here to about here, it moves to the side. All right, where where it kind of turns into bearish neutral, right? Until we get a little closer here to what's happening as of late. Since October of last year, the market has been down. All right, we see this very big bearish engulfing candle here. Price retests that trading area. I mean that trading range, and then pushes down, and then we made a final down. We have a nice bearish leg of structure here, right? And what happens in an impulsive move? After an impulsive move, you're looking for a correction. All right, that is how down downtrends are formed. You make the impulsive move, you make the correction. Impulsive move, correction, impulsive move, right? So we're in correction. Does this down close candle mean that the the retracement is over? Should we interpret it that way? Well, upon close inspection, we did close past the open of the previous candle. And where did we react to? This needs to be an important area. We look to the left here. What do we see? Ha ha. Ha ha. These up close candles and the close below them, it forms an order block. And that's where we're at. All right. What I want to see now is another order block form off of this order block. That would make this a propulsion block that would force price to the downside. But we need more time on this one. Let's take a look at the weekly. All right. The propulsion block is an order block that is formed off of another order block. All right. What we see is that impulsive move down, and then this final leg down. We see that the market had a V-shaped quick turn recovery here, pushing price up in a corrective kind of structure to the upside. It grinded its way up, and it's been grinding. And nobody wants to trade that kind of grind because it moves kind of sideways, but it's kind of moving up. You know, why would you want to participate in that? All right. This candle here is the one that draws my attention because what you look for is, if price is going to retrace, where would it stop its retracement? In premium price. Remember what I keep repeating, because this is what ICT taught. This is above the trading range, above the trading range 50% area, the equilibrium, if you will. This is premium prices. This is discount prices. All right. You want to take your longs from here. You want to take your shorts from up here. Give you the highest probability of success. All right. Here's your order block line from the monthly, right? Price breaks into that order block line, all right? Forms another order block here. All right. This is on the weekly time frame. Let's take a closer look at that. All right. We see the down close candle, the close below the low of it. This is an order block. All right. What I want to see is price. I'm going to put tool on here. What I want to see is price respect the 50% of this, what I'm going to call a propulsion block. All right. All right. It's not my, this isn't my teaching. This is ICT. So when I say what I call, it's really what he called it. Okay. All right. So, and I don't want to see price close past that high. We see price did come back into this, the propulsion block area, and touch that 50% and then pulled away. All right. And we got to close here. This is looking like if I was if I made my entries on for swing trades, all right, and I made my entries on the weekly time frame, this is what my entry would look like. You can put your, your stop loss at the high of the body of that propulsion block, or you can go to the top, the high of the move, and that both of them would be fine. And you want to get at least 2R. All right, and this is what I'd be looking for. I'm thinking that this is going to turn around. I've been saying that for a while, because we're at this higher time frame order block here, and we have a propulsion block forming off of that order block. So I do like this. I love the fact that this bearish candle came and closed below the low of the previous weekly candle, and we have a test of it right here. I'm looking for price to continue down from there. That's what I'd be looking for if I was a swinging kind of guy. All right, but if we go to the daily, what I want you to see is that there is the up close candles and the stronger sell off. All right, this is a close below those up close candles. Price is coming back inside of that. All right, this is on the daily. All right, I'm moving this larger. I don't like a whole bunch of lines on my charts. All right, so we have the order block, you have the impulsive move, you have the correction above the 50%. There's a bunch of things to consider. All right, but after a while, it all blends into one mechanical kind of trading system. All right, we're above the 50%. We've entered into what? Premium price. That's correct. And it doesn't mean it won't come higher, but I don't want it to. I don't want it to break past this fair value gap. Okay, let me boom. All right, this is a daily bearish fair value gap. I don't want to see it. I don't want to see that. I want to see that fair value gap hold. All right, so we're in the premium of this trading range on the daily. All right, and we've inside of the order block. What I want to see is a move down. I want to see a move down. Let's move this up just a little bit. Get this a little bit bigger. What I want to see is a move down from this open down below Get out of here, man. All right. Boom. Let's do this. Boom. All right. Give me something, man. Dang. Oh, I didn't put no color in it. All right. I'm over here messing up. I'm sorry, y'all. I'm sorry. All right. So I want to see a candle come down, take that low out to form another order block off of the larger order block. All right. I want to see this move into the fair value gap. I like to see that bearish move. That's a good move. And I want to see another one that breaks lower than that close. I want to see something close high, lower than the range of that small range candle from Friday. I want to see a candle, something like this here, where it takes the low of the candle that made contact with this fair value gap. All right. I want to see that overtaken. That's going to tell me we got a propulsion block here, and I don't want to see price come back inside. Oh, there you go. I don't want to see price close below, up above that 50%. I want to see a candle wick up and then turn into another candle down here, which closes below this one, and we're going to see price head towards those lows. And again, if I was uh, that kind of trader, I'm a day trader, folks. Uh, what am I doing? All right. I would set my trade up like so, right at the opening of the propulsion block. I could put it above the high, which was it's the safest, but I like to put it above the body, as I was taught to do. And by don't worry about it. I got plenty of teachers out here. I can name too many, but and I would be aiming towards these lows. All right, I want to get at least 2 hour. I want at least a 2 hour trade. Right, heading towards this fractal low here. All right, and I would definitely be looking towards something like that. Does that make sense? All right. Anyway, that would be the setup. Anyway, I give you some things to look for. I'm looking for a close below this low, so I'm going to put an alert on that. And if it hit, as soon as I get a candle that pops below that, hey, things things are about to get very exciting. All right, and this is where I would take my entry. I hope you find this helpful and insightful. If you do, make sure you leave a comment. If it's confusing for you, make sure you leave a question. Make sure you hit the boost button and the like button. And I want to see you on the next ones. Hey, listen, before you go, I've already put out a movie. I've already put out a video. I'm not making movies. We put out a video for pound USD, euro USD, and the US dollar index. All right, put out analysis. That US dollar index is very important. I'm going to leave links for you at the bottom of this video, and I will see you in the next video, and thank you for watching.